Hello guys! NIO stock is currently trading at a significant discount compared to previous years, presenting an intriguing opportunity. Let's dissect the details. Guys, NIO stock is currently more undervalued, cheaper than in 2019 when it was at its lowest. Let me explain. I've come across some very interesting information. So right now, the market cap is $8.95 billion, okay? In 2019, at its lowest point, NIO market cap was $1.55 billion. And that was when their quarterly deliveries were 4,799. In the third quarter of 2019, they had only $274 million in cash. So if you subtract the cash amount from the market cap, $1.55 billion minus $274 million, then market cap minus cash, you get $1.276 billion. That's the company value without considering cash. But what about now? Now it's $8.95 billion with quarterly deliveries of 3053. Much better than before. In Q1, they had $8.1 billion in cash by the end of Q4. So that means $8.95 billion minus $8.1 billion cash. You get $0.85 billion. Did you hear that right? Now the company value minus cash is $0.85 billion right now at this moment. Whereas in 2019, when NIO stock was at $1.7 at the very lows, the company value was $1.276 billion. Okay? This is almost a 40% higher valuation than it was now. Did you hear that right? The company minus cash is 40% cheaper now than it was in 2019 when NIO stock was at its lowest. This is absolutely crazy. Guys, you don't need to be a rocket scientist to see that this is very undervalued. After saying this, yes, the stock can go even lower. Everything is falling. Okay? Expect crypto to fall, commodities to fall, stocks to fall too. Alright. But these are external factors. But if we look at it from a valuation perspective, NIO is at a very low price. Now, I also want to talk about the future of NIO. Why should investors be on this journey? Is there anything hidden in the future? Absolutely. That's because Envo will come on a 900-volt architecture, while NIO current vehicles are on a 400-volt architecture. Very interesting. And they also pointed out that when NIO cars are launched, it might be difficult to sell NIO cars. The reality is that NIO did not prioritize fast charging on their second-generation platform because they have battery swap. Battery swap will always be better than fast charging, and NIO always advertises this. But in the end, this is also a specification where NIO is a bit behind. But the contrarian argument is that in Envo, there is a 900-volt architecture, battery swap, all the features you want. The customer wants a big screen, comfortable seats, a fridge, good design, very good design, and it will be cheaper than Model Y. This means the car will sell like hotcakes. Another way is that without a 900-volt architecture, NIO already has a 45% market share in the luxury premium EV market. Imagine if they have something like that. Then they will obviously sell a bit more. And then they also have a sub-brand, which I assume will sell very well because it also has battery swap. We, as investors, have tolerated all the cash burn and R&D expenses to create these two brands. But when we start selling those cars and start making profits, will we lag behind due to fear and uncertainty? Like some major hedge funds are doing, some big hedge funds are selling because maybe the stock price is a bit lower, and they can't have a stock in their portfolio that has a significantly lower share price. It's just like they've set that rule. Like maybe some hedge funds shouldn't have a stock below $5 per share. But this is something you should really ignore. Having a low share price and being significantly undervalued doesn't reflect where this company is going, where this company is. Again, the company minus cash market cap minus cash is $0.85 billion. That's quite low, $850 million. Certainly, some will argue about the cash burn. NIO cash burn is quite severe, $600 or $700 million every quarter. NIO might solve this soon. And that's the argument many people have. but you need to understand that they have already done a lot of R&D work. And yes, NIO CEO said R&D expenses will remain the same. Alright, he said that. Yes, he said that. But we've also heard from the CFO, and logically, they've already done a lot of R&D work to create these two car companies, these two sub-brands. There's a lot to gain from this. In the earnings call, the CFO mentioned that CapEx will be reduced because they are involving third-party partners to build swap stations. We have also seen significant commitments from large government state-owned power grid companies to build these swap stations, which will be another reason for people to buy vehicles from NIO or its sub-brand. Speaking honestly, there's no chance of NIO going bankrupt because it is so valuable to the government. The Hefei government rescued NIO before, either in 2019, late 2019, or early 2020, with an asset swap package that was fantastic. NIO has also become a major employer in Hefei, creating jobs and attracting talent to the province. In the end, if they need it, they can seek help from the Hefei government, which I believe they won't need, but still, the Hefei government will definitely be willing to do another asset swap deal. This is a no-brainer. It's a no-brainer for them too. Besides, you can see that state power grids, very wealthy state-owned government companies, energy companies will invest in NIO, take a part of NIO, because they have all this swap and charging infrastructure, and they want to be part of NIO because they have a lot of money and can spend it anywhere. Alright, and NIO has very good relationships with the most senior people in these energy companies. So, this is another area where NIO can lean on if needed. Something very important to understand, and that is that stock price doesn't care about valuation. Most investors are driven by emotions in the short term or medium term. The stock price is like a voting machine, as famously stated by Warren Buffett. If there are more sellers, it will bring down the stock price. More buyers will drive the stock price up. There might be some logic behind the movement of stock prices, but it's not understandable why the company is valued at only 0.85 billion minus cash. Everything is driven by fear, and it's this fear that is pushing down NIO stock price. There's a sentiment of hatred in the investment community, thinking that NIO is burning too much cash, and their future is very bleak. That NIO has no future, it will end in a few years, is a bearish statement they believe in. But the truth is quite the opposite. They are coming up with a sub-brand and a sub-sub-brand. They are going to grow rapidly in sales and deliveries. Maybe their sales and deliveries will increase tenfold if they become like BYD, which is delivering 40,000 cars per week. How crazy is that per week? Now, if NIO has a competitive product that goes against it and has battery swapping, which is the ultimate solution in the era of electricity, then this will be a very interesting offer. People might prefer to buy NIO's sub-brand car, and that too is affordable. And suddenly, it will become affordable for everyone. This is an absolute no-brainer investment. The community is thinking that everything is going downhill. It will end soon, but the reality is that in the coming months and years, some very good things are going to happen that will take NIO deliveries to sky-high levels in deliveries and revenue. So, people are thinking of doom and gloom. The reality is that we are about to take off. I think it would be best for investors not to be too emotional and reconsider why they are buying the stock and see if those reasons are still valid. Remember, the stock is now cheaper than it was in 2019 if you subtract cash. This is absolutely madness. It's a no-brainer, my friends. A no-brainer. Why do people buy NIO stock when it was at $50 or $60? Because they thought NIO future would be bright. But why are they selling NIO stock now? Because they think NIO future is dark. So yes, I still believe in NIO future. But what you want to do is up to you. Despite market fear, NIO undervaluation and promising future make it a compelling investment. Emotion-driven selling overlooks its potential growth, presenting a clear opportunity for those who see beyond short-term sentiment. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.